All right, today's Wednesday, and we're going to do our mid-market commentary here, just kind of do a summary of where we are in the pattern. Now, we've been tracking this pattern for quite some time. My personal belief is if you really want to learn how to be a trader, you really want to learn how to interpret charts and have a good foundation of understanding what the broad picture is, you do so every day, and you track the tick by tick daily bars and start to understand how they relate to an overall pattern. That's the way you're really going to learn and understand when you are potentially at a turning point, when you're potentially at a point of resistance, which may imply that the market's going to move lower. A lot of times traders get hung up on impatience, where we could be trading at a level of resistance for several days, and I will hear traders or get emails from traders telling me, well, obviously this isn't a point that we're going to turn and head lower because we continue to trade at this level. I mean, that's the first level of, frankly, foolishness in being a trader, is to apply your interpretation and your emotion and make an assumption that something is or isn't going to happen just because it hasn't happened yet. So the best thing to do with your charting is to start with a bar chart and give yourself a good education. We provide that at Options Moneymaker through our education programs, but give yourself a good education in understanding how to recognize channels and cycles. It's really going to give you a tremendous amount of confidence, especially on the indexes, that these indexes do in fact, the market in fact moves in waves and cycles. That is a reality, and it's probably the only single absolute that I say with unwavering confidence that the indexes will cycle up and the indexes will cycle down. It doesn't matter to me at all what the news is that is supposedly driving that cycle. What always amazes me is when we have news that prompts a particular movement higher or lower. Financial media is always talking about what that story was and why it prompted the market to move as it did. And many times, if you just back up and look at your macro view of a bar chart, you're going to see that the price of the index did nothing more than move to its own natural level of support or natural level of resistance. And that's pretty much what we've seen in the last few days with the chaos that has ensued in the market, the turmoil that has ensued in the market due to Great Britain's vote to exit the European Union. So that was the story that was assigned the responsibility for pushing the market lower, when in fact what we had been doing is trading near levels of resistance, and there were indications on both our bar charts as well as our Able Trend long-term charts of strong sell signals. We didn't know how far that was going to push. We didn't know at what point it was going to occur, but we had been aligning many of our positions to benefit from a downside move because of those types of signals. And then we were the beneficiaries on Friday and Monday of those downward movements. And frankly, we cleaned up profit wise while so many people are kind of licking their wounds and looking into what do they do next? How do they recover from here? So let's start with NDX. I'm going to just talk about the 1-year bar chart as a starting point, because I think it gives you a great macro view of where we have been and where we are currently trading. This declining pattern that's highlighted in red shows all of the cycle movement up and down that has taken place since early September of last year, early September of 2015. It shows each cycle that moved up, each cycle that moved down. It shows the strong cycle movements up, where we bobbled around up and down, and the strong cycles down. It shows all of that. But all of the activity is inside this declining channel. Now I'm identifying this red pattern. support, and parallel resistance as a channel. Everything that occurs inside the parameters of that channel are the individual cycles that actually are making up the parameters of the channel. So you've got rising cycles, you've got declining cycles. When we started to hit that declining level of resistance and fall away from it, we were getting more and more validation of that line as resistance. We had a whole series of days in here, 6 days that started, 7 days. It really started the 1st of June and led up to the 9th of June. So about 7 trading days. All of those were validating along that declining level of resistance. But you don't know that when it's occurring unless you have some point of reference to a prior level of resistance, which we did. If you have that prior level of that prior reference point, then you're going to have a much clearer understanding of where we're trading relative to where we've been in the past. Now, that doesn't guarantee we won't move higher, but when you have a strong line of resistance or a strong line of support, there is a much greater probability that at that point in time, unless this is where the market's going to shift, that's the point in time where you're going to start to see a directional change that's consistent with the channel. And our channel had a declining bias. Now, within that channel, there was a cycle that I've highlighted in green. Cycle is moving higher, and there are also cycles within that cycle. But this cycle activity that's highlighted in green was all contained inside the declining channel. So when we did, in fact, move lower, and the movement down of almost 300 points on the NDX started on Friday, we broke below support of this rising cycle. So now we have two things that we can look back at. One is a series of 7 days where we validated resistance, declining resistance by trading right against it. And then we broke below support of a rising cycle. So that tells me, this is my interpretation based on my 30 plus years of trading and following charts, but that tells me that we could potentially be in a shifting pattern, meaning we've been in a rising cycle since about mid-January, mid-February. We've been in a rising cycle, but now we've broken below support of that rising cycle. So that would tell me that perhaps we are starting to shift into the next declining cycle. But so far, all subject to change, all of that is contained within the declining channel. So what happened after we saw the big sell-off on Friday and follow through on Monday, and this was all attributed to Britain leaving the European Union, we've now seen 2 days of very strong up moves. Now I want you to just, for a moment, just play a game with me and set aside any knowledge of news. Just pretend you don't know anything that's going on in the outside world, and all you have available to you, all you have is this chart sitting in front of you. You have this chart and you have a certain level of knowledge about what these patterns have shown in the past. Number one, when we had the big sell-off on Friday, I'm ignorant to the news, don't really know what's going on, don't know really what caused it, but we broke below support and we formed a Bollinger Band snap, meaning we're trading now outside the 2 standard deviation Bollinger Band. That tells me that there is likely going to be some sort of movement higher, not necessarily immediately. Sometimes it will take a few days because we're looking at a daily bar chart and each bar represents 1 day of trading. So that doesn't necessarily mean that it's going to move back higher immediately, but it's something to pay attention to. Now, day 2, which happened to be Monday, again, I'm ignorant to the news. All I'm seeing is there's a very, very, very strong Bollinger Band snap on the daily chart. And when I see a Bollinger Band snap to that degree on a daily chart, I'm inclined to pay very close attention to it. But something else occurred on day 2 of my Bollinger Band snap, and that was I formed a natural level of support. What that means is we moved down to a certain level and then we bounced up off of it. So I know that the price at this day's low is a support level because we closed above that level of support. I also know that by tying a level of support into that bar with previous bars, I actually have a declining cycle, and it corresponds almost perfectly to this whole series of declining resistance points here. So that was the activity that I was noticing. It was not a surprise to me that we saw a strong movement to the upside because that, in fact, is the Bollinger Band snap. I didn't know where we were going to go from there, so I pretty much sat on the sidelines. I had a couple of positions that were at risk as we were closing the market yesterday, covered those positions so that I wasn't completely exposed, and we've now seen a movement higher. Now, I'm continuing in the evaluation here because it starts with identifying your longer term channels, then identifying the cycles within that channel, taking a look at patterns such as Bollinger Band snap, and then I want to layer on for you one other item. If I take a look at the high on the day before we had the big sell-off, and I take a look at the low from Monday, a 62% Fibonacci retracement pattern is right here. What that means is that we moved back up 62% of the sell-off from the high of Thursday to the low of Monday. A 62% retracement is a key indicator. It doesn't mean we won't move higher. It just means that it is not uncommon for us to retrace 62%. Now, if we continue to move higher than that 62% retracement, then we may actually see the index move all the way back up to declining resistance, which would be around 44.76. So let's say another 110 points, 115 points above where we're trading. But if we stall out at this level, and the stalling is sometimes difficult to identify, but if we stall out at this level, it may potentially mean that this is now going to see a reversal and a move back lower within this cycle. So one last thing is that this gap right here is referred to as an oops pattern. I learned this pattern when I first started trading over 30 years ago. I learned this pattern from Larry Williams, who is one of the most well-known futures and commodities traders out there. Some of the first technical indicators I learned were from Larry Williams, and I still use this today. The oops pattern is basically saying that there was a gap between the prior day's high and today's low. That gap, Larry used to refer to it as an oops pattern because it's a bit of an overreaction to whatever is going on in the news or in the market in general that's prompting this sort of a move. And in my analysis and study of oops patterns over the years, 93% of the time, so a high percentage of the time, the price of the index will move back lower to satisfy the oops, meaning it will cover that oops. It'll trade back down to a high that corresponds to the high of the previous day's bar. By the same token, if we have an oops, which we did from Friday's close to Monday's open, 93% of the time it will retrace that oops and move back higher. So we're in kind of an interesting situation here where we're trading right at around the 62% retracement level, which could potentially push the index back lower and cover that oops. But we also have an oops to cover, which means the index needs to trade back to 44.20. So that's only about 60 points above where we're currently trading. So that doesn't necessarily mean that one of these OOPS patterns is incorrect. It doesn't mean that at all. It just means that, remember, only 93% of the time an OOPS pattern is satisfied. Or it could mean that both of these OOPS patterns will be satisfied, one potential scenario. And folks, I'm not trying to predict this at all. This isn't what I'm saying is going to happen. I'm just trying to familiarize you with the types of patterns that you want to keep an eye on and be familiar with so that you're stacking the deck in your favor each time you take a trade. So one potential scenario would be we're at the 62% retracement area. We could see the index retrace back lower, satisfy that OOPS pattern before then heading higher to satisfy the OOPS pattern on the upside. That's a possibility. Again, I'm not predicting that. Now, I want to take this retracement grid off, and I'm going to jump to a 10-day, 10-minute chart. And when I said that since we're trading at or around the 62% retracement level, it's kind of hard to see when we might be flattening out. That's when I go to a shorter time period chart. 10-day, 10-minute chart is my favorite time period when I'm doing this type of evaluation on a bar chart. And what I'm really looking for is the 10-minute bars starting to show very, very little cycle movement. And that's pretty much what we're starting to see here. If I put a channel on this pattern from this high to the current bar's high and the low in that sequence, I mean, for NDX, that's a 12-point range. That tells me, and you can see very clearly that we were in a strong rising cycle prior, that tells me that we've started to flatten out. Once again, it doesn't mean we won't break out to the upside, but we are either going to break to the upside or break to the downside when the index starts to grow some legs again and wants to move. So as I've said, most every day that I've done these mid-market commentaries, I'm going to keep in mind what this story tells me about my bar charts. I'm going to keep that in mind. But then I'm going to revert back to my 3 9-minute Able Trend charts and my 515 Able Trend charts, and I'm going to take those signals. Now, when we're trading right at around the 62% retracement area, I was looking at going long because the Able Trend 3 9-minute chart was saying there was a good buy signal. So I've had one trade today, one day trade that I did today where I got in to a long call, bought to open a long call, and closed it out for a very nice profit of $3 on the trade. So the fact that my bar charts are telling me a story that implies that there is probably a greater bias to trend lower doesn't mean that we won't take a trade to the upside. What you really want to do here, folks, is you want to educate yourself and take in data. You don't want so much data that you're just going to talk yourself out of every trade. In this case, if I saw a signal to go long on my 3 9-minute Able Trend chart, and it's a strong signal where we're double stacked to the upside, and I've waited for confirmation of my signal, I'm probably going to take that trade. But what I'm going to do is I'm going to position my strike on that trade so that I can very quickly turn it into a spread and turn it into a positive credit spread if, in fact, the index reverses on me. So this isn't a lesson in staying out of trades because the bar chart's telling you one thing and maybe Able Trend's telling you something else. That's not the lesson at all. So pay very close attention. The lesson is take the Able Trend signals, trade those signals, use the bar chart and what that story is telling you to decide how to most beneficially position your strikes and maybe give yourself a little bit more time on the trade. If I was going to open a trade right now on an Able Trend signal to go long, I would go out of the money. I'd probably go out of the money 30 to 50 points so that if the price of the index reversed on me, I could very quickly sell to open a lower strike and turn what was a long call into a call credit spread with a positive credit. That credit spread then, if the index is reversed, will most likely end up being a a profitable trade for us. Now, if I am opening a put spread based on what I see in my bar charts, and then I see a sell signal on Able Trend, if I buy a long put, I'm going to go as deep in the money as I am comfortable paying to manage my risk, so that if the index reverses on me, I'm going to be able to sell to open a strike that still is in the money, and then I'll hold an in the money long put vertical spread, which is exactly where I want it to be. I want it to be in the money. So the structure of my trade and the selection of my expirations is greatly influenced by the patterns that I see on the bar chart. But 99% of all of my trades are still going to be based on the Able Trend signals. There is one exception, and I'll just tell you that not everybody trades along with me on this, but the one exception is when I see a Bollinger Band snap. When I see a Bollinger Band snap pattern, particularly on the daily chart, I will almost always jump onto that as a trade signal, regardless of what any other technical indicators are telling me, because I have so much experience with it and it's been such a highly reliable, although not perfect, trading indicator. So when we had the initial market sell-off on Friday, right at market open, I jumped on buying to open a long call. Now that might seem almost insane because we've got this huge sell-off. We knew we were going to have a big sell-off because we were looking at the overnight futures before the market opened. We knew that the Dow futures were down big. The NDX and SPX futures were down big. So why on earth would I buy to open a call at the open? And the reason simply was because I knew what the implied open was going to be in the index. I knew where that was going to be positioned relative to the Bollinger Bands. And I knew that there was a high probability again, but no guarantee, that we might get a quick bump to the upside. That's exactly what happened. I think I was in that trade for a matter of a few minutes and took a nice little profit out of a long call. I think I ended up doing 2 of those on Friday. So these are patterns that are tradable, particularly the Bollinger Band snap on the longer term. But again, I want to emphasize 99% of all of my trades come from the 3 9-minute Able Trend charts and the 515, because those charts are going to show you the more immediate signal. I can't really trade effectively the daily chart unless it's something extreme like a Bollinger Band snap, because everything is embedded in a single bar. I want the detail bars. I want to get down to more detail so I see the fluctuations of movement within that bar, and those fluctuations of movement are going to allow me to take a trade and be profitable on it. And that's what Able Trend offers us. It gives us a very clear picture of the 9-minute and 3-minute support or resistance. It gives us a color coding that allows us to know when we should just comfortably sit on the sidelines and do nothing, which we did most of yesterday as things just kind of flattened out yesterday. In fact, you can see here right on a 2-day, 2-minute chart, look at what happened on Tuesday. All of that flat, practically no movement, very, very minimal cycling in here. We didn't do a lot. There wasn't a lot of activity yesterday. There was towards the close, and we started to climb, but you're going to have some days that are quiet, and you're going to have some days that are much more active. So anyway, I just wanted to share that with you because I think that the charts, the bar charts, in combination with the Able Trend charts are a winning combination, especially when you apply the strategies that we use in the live trading room here at Options Moneymaker, and that we teach in the Profit Accelerator program. That combination of factors is really a very strong winning combination. We've even heard from our contacts at Able Trend that their charts, we believe their charts are some of the best that we've ever worked with in over 30 years. Michael and I have been trading for over 30 years. Michael is the primary host of our live trading room every day, And we've both been trading for over 30 years. We think that their signals are spot on, some of the best we've ever seen, the most accurate and reliable. But it still requires a strategy. And we've heard from our friends at Able Trend that the combination of their signals with the strategies that they've become familiar with are some of the best performing that they've seen. So we've kind of married together two different companies here. Able Trend provides great signals, great charts. We provide education on the signals, and we think it's a great combination for people who are interested in being an active trader. I'll leave you with this thought. If you can make $400 a day on an average, $400 a day on an average, may be as little as one position, might be 1 to 2 positions. Now, we generally have at least 1 or 2 positions that we're trading. Some days we trade much more. There are some days we don't have any trades. But on an average, if you can make $400 a day, which may require a risk of around, let's just say $6,000 plus or minus, you can recycle that same capital over and over again. You make $400 a day, you're going to be making just under $100,000 a year. That is the reward risk ratio. $100,000 of potential reward against maybe a $6,000 to $10,000 risk. You need more than that in your account, but if you're willing to put $6,000 to $10,000 of capital at risk on a single trade, knowing that you can cover that, you're never going to put yourself in a situation where you would expose the entire amount of investment to a loss. So it's putting 6,000 to 10,000 into a trade and monitoring it, covering it when necessary, protecting it, managing it when necessary, closing it out for a day trade profit, locking it in using our leg-in strategy for a guaranteed profit that you take the following day. All of those things are strategies that are available to you. But it starts with a foundation of charting. You layer the strategy on top of that, and I think it's a winning combination. So for those of you who are new to the live trading room, welcome. Glad to have you here. Uh, don't get bored if it seems a little monotonous here for a couple of days. It can be like that, and then all of a sudden you'll have a day like we had on Friday or a day like we had on Monday, where things were moving so quickly. Even the brokerage firms were having a hard time keeping up with the trades. But we like that. We're patient when it comes to our trading. We'd rather take good trades than just take trades because we want to do something. That's not a great way to trade. So if you're interested in learning more, the Profit Accelerator program can be signed up for and viewed on our website, optionsmoneymaker.com. I hope you guys have a great rest of your day, and I hope this was helpful to you.